I see a lot of people are already in the chat dropping comments in there. Feel free to drop a comment as you tune in. We'll put the chat up on the screen there. I see people checking in from different places. Marion says hello from Las Vegas. Jamie, hello from Sacramento. Let's see, people from ATL, Dallas. Awesome, people checking in. That's awesome. So we're going to wait just a couple of minutes here to get started so we can wait to go live on all the different platforms and give everybody a chance to hop on as well. But for those of you just tuning in, go ahead and drop a comment there. Hello from Miami. Hello back to you from Miami. And we'll just wait a second here. All right, people in the chat. Hello from rainy and windy Bay Area. Oh, that doesn't sound good. Thank you, everyone checking in from all over the place. Haven't seen any people checking in from a foreign country yet, but that is what we're going to be talking about here today. Hello, everyone. All right, cool. Well, let's go ahead and get it started then. So let's go ahead and take the chat off the screen and we will get it going. So welcome, everyone. My name is Kyle Hershey. I am the COO of The Mortgage Calculator, joined by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, and one of those loans that we love to do is a foreign national loan. Now, not only do we specialize in non-QM here, but our corporate office is actually in Miami, Florida. So obviously the foreign national loans are something that we see a lot of. Now, our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and realtor, has obviously ran into his fair share of foreign national deals, being that he's based here in Miami. So I'm going to go ahead and send it over to him to talk about what a foreign national loan is, and then go through how these work for us. And I think he's got a presentation for us to check out as well.
Yes, I do. All right. So, welcome to our mentor meeting with the Mortgage Calculator. Tonight's topic: working with foreign national buyers. So, I do have some interesting slides for you tonight. But first, let's get into what is and what isn't a foreign national buyer, right? Foreign national buyer, a foreign national, let's say, cannot be a citizen, nor resident, nor non-permanent resident alien of the U.S. Now, what is a non-permanent resident alien? Some of you may ask. That is somebody working here in the United States legally with a work permit authorization, also known as an EAD card. That's, I'm sure it's an acronym for something. Um, so if they're working here in the U.S., deriving income from here, then they are not a foreign national. So that would be the non-permanent resident alien legally working here. That would be the permanent resident who has a green card who's working here. That would be the citizen working here. And most importantly, that would also be the I-10 borrower, the I-10 holder, let's say, who's and somebody living in the U.S. does not have legal status in the United States or legal immigration status in the United States, but is working in the United States, is filing tax returns in the United States, and does have an international tax ID number for purposes of their income tax filings. So the common thread on all of those is that they all derive income from the United States. Our foreign national borrower derives the income. If income is being derived, again, if it's a full doc loan, that income is derived outside the US. It could be from the country where they permanently reside now, from some other country where they may have businesses set up, but wherever it's from, it can't be from inside the US because we get that question a lot of times. For national, have multiple LLCs here, and they want to take advantage of, lower rates, possibly higher LTVs, possibly of a national borrower, but that is not going to be possible. So the first thing that we need to be clear is what constitutes a foreign national buyer. So now you know. So let me get into the presentation here so I can actually share some nice information with you all. Now, I'm taking a little bit of a different twist on this right now. Rather than jump straight into the loan side, we're going to take a more holistic approach at foreign national business, because in order to be a foreign national borrower, they at some point had to have been a foreign national buyer, right? They're either going to buy cash or they're going to buy with financing. So the important thing to note on that is then you need to set up your marketing, right, in those places, locations where the foreign national buyers are buying, right? So with that being said, here is some foreign national by residential real estate activity in the United States, right? Giving you all some highlights here. This is 2022. Now, all of this is um, credited to National Associations of Realtors, of which I am a member of the National Association of Realtors. So my dues dollars go to compile these amazing reports. This one happens to be the profile of international transactions in U.S. residential real estate 2022. Got to catch my breath after that one. So, 2022 highlights, there were $59 billion of foreign buyer residential purchases from April 2021 through March of 2022. And I bet you if they go March 2022 to February 2023, it's going to be, probably 40, 50% higher than that, because most of the foreign national buyers are now getting their visas again. If they are from a non-visa waiver country, they weren't able to come here to buy. And in most cases, they need to have a valid passport and visa to close on the loan. Hence, there was a little bit of a holdback, but those floodgates have opened again. So there are 98,600 foreign buyer existing home purchases in that time frame. 57% foreign buyers who reside in the United States or non-immigrant visa holder with a B type visa. Now, the top countries, this is what's important to know. Those of you that are looking, okay, where am I going to put my marketing dollars, right? Because we all have a budget and we all want to make sure that that budget is maximized. So top foreign country buyers are Canada, number one, with 11% of the transactions, 5.5 billion, and they love Florida. Mexico, number two, 8%, 2.9 billion. Notice that's probably by number of transactions, not by dollar amount. If you notice the example here, right? China, 6% of foreign buyers with 6.1 billion. So we see that the Chinese tend to buy little bit higher prices. India, 5% of foreign buyers is 3.6 billion. Brazil is 3% with 1.6 billion. And Colombia, which is number one in Miami lately, 3% of foreign buyers with 1 billion. So, where are the top destinations? Again, mind you, this is very important for where you're going to put your dollars. You know the countries that you're going to be reaching out to. And now look at the states where they're buying, right? Where do you want to be licensed if you want to maximize a foreign national business? You're talking Florida, as we all know, right, 24%. California, 11%. Texas, 8%. Texas is coming on really strong lately, too. They're lately number one in all the searches, by the way. Arizona, 7%. New York, 4%. And North Carolina, 4%. And the median sales price of the foreign national is a little bit higher than US. They are at 366 100, where the US national borrower is 355 700. So now a little bit, we're breaking it down a little bit more. Where in the US are the
We can't read any of that. You're gonna have to break that down for us.
yeah,
buddy.
that's what I'm going to do. And I can't make it any bigger. I'm sorry. I'm going to tell you right now. But you all are, can get a copy of this PowerPoint, by the way. But okay, we have the 6 top countries that I just went through, right? Now, where are the top 6 countries buying? Okay, number 1 here on the left upper is Canada. And Canada, number 1. I'll just go with the top 3. Then you all can look at this at your leisure. But Canada, top 3 is Florida at 45%, Arizona 23%, and California 12%. Mexico, as you could imagine, is with Texas at 22%, then Florida at 12, and California at 11, and Arizona at 11, tied in there. China, this was an easy one, 31% going to California because obviously they are on the West Coast. And now, mind you, a lot of these have to do with ease of transportation and reaching the end destination. There are a lot more flights from China to California and New York than there are, for example, to Florida. But now you see Florida still attracting a good amount. But then you got Indiana there at number 3. So they're buying a lot of farmland in Indiana for sure, right? Then we have India, known for their technology sector, all the engineers, programmers, entrepreneurs coming from India. They love California, New Jersey, and Utah. Gotta look deep as to why they like Utah, but there they are. And now Brazil. This is an easy one too, right? 55% of Brazilians buying in Florida, 10% in New Jersey, and 8% in, when to figure this one out, Wisconsin. That's an odd one. And then Colombia. 60% of Colombians are buying in Florida, 11% in Texas, and 9% are buying in Maryland. Mainly the Maryland, I think, has to do with, and Virginia has to do with proximity to Washington, D.C. So now we're going to look at sales volume just to see countries of origin of buyers from the top 6 U.S. states by sales volume. So basically here, Florida's foreign buyers are coming from Latin America and the Caribbean, 39%. But now here's where it gets interesting. In this example now, we're actually including U.S. migration from other states, but we're not breaking down the states in this one, but we're showing 25% of business in Florida is from other states in the US, 39 from Latin America, and 12% from Europe. California is Asia and Oceania, which is New Zealand, Australia, is those other islands, is 38%. North America, 15, and Latin America, 12. Texas is getting, again, Latin America 31%, Europe 27, Asia and Oceania 16%. Arizona is 48% USA, 15% Asia, and 14% Latin America. New York, 31% Asia, 22% Europe, 15% Latin America, and last but not least, North Carolina, 38% Asia, 25% Latin America, and 13% Europe. Oddly, only 2% from North America into North Carolina. That's rather odd. So now we're going to get into this, breaking down actually what are our options. We see all the activity, and again, this PowerPoint will be available so you can all download it and set up your marketing to all those countries and to all the states. Make sure you're licensed in all the right places. But now let's break down the actual options and what can we do. So foreign national borrowers are eligible for purchase and rate and term and cash out refi transactions. I throw in, rate and term is probably is I didn't add it separate because it's like a purchase, but most people don't know that they can do a cash out refinance as well. And again, I touch base here on what a foreign national is and isn't. Not all visa types are acceptable. Please note that. For example, a diplomatic immunity visa is not acceptable. So anybody who works as a diplomat in a consulate or something like that, they're not going to be able to be financed with foreign national loans because they can't be taken to court. You can't sue them. They have diplomatic immunity. If they don't pay, then we can't do anything about it. So keep that in mind. You got to look at acceptable visas. Right now, how the market stands, the maximum LTV on a purchase and rate and term refi is 75%. Mind you, this may decrease if you got a $10 million loan amount, but for anything like under $3 million, this is applicable. And 70% max on a cash out refi for foreign nationals. Excuse me. Full doc option, and I'll break these down more in the next coming up slides, but the full doc option will allow for second home occupancy as well as short-term rentals when the property is available. The borrower will need to provide an accountant letter from their country and a bank reference letter for credit reference, usually for the full doc option. DSCR option is more streamlined and in most cases will not even require an accountant letter nor a bank reference letter. Much more streamlined option, right? So we break it down here a little bit more now. Now, our debt service coverage ratio option, our truly beloved DSER, is the most streamlined investor friendly option for foreign nationals. Again, I'll remind everyone it is only for investment properties, never to be occupied by the borrower nor their family. Don't be swayed in committing occupancy fraud. Be on the lookout, because note that the DSCR is only for investment properties, and they do have to sign a couple disclosures there in pretty big type that lets them know that it's only for investment purposes only. Now, the gross monthly rent, which can be derived by either a 1007 market rent valuation, an AirDNA short-term rental projection, or 12 months of short-term rental revenue, right? Any of those divided by monthly PITI, and if applicable, if it's a condo or townhouse or a PUD, association expense. That's how you arrive at the, and actually it's a redundancy there because I put the DSCR ratio, but I could actually take the ratio out and just leave DSCR because that stands for debt service coverage ratio. So this second bullet point is probably one of the most important ones that most loan officers will face when properly structuring any DSCR loan, much less a foreign national DSCR loan, which can be a little bit, more complicated if you have a 1.0 or above DSCR, depending on where you're sending the loan. But this is the most challenging part because we could have short-term rental properties. We could have, so many different variables, a vacant property. So keep an eye out on your structure to make sure that you don't fall short on your debt service coverage ratio calculations. There are some options for a foreign national DSCR below 1.0. So we do have a DSCR 1.0 and above option, and a 0.75 to a 0.99 option for foreign national. That is available. Most foreign national options out there are going to tell you that they're only 1.0 or above. But at the mortgage calculator, since we do try to have as many options as possible, all our solutions, we do have the 0.75, the 0.99 option. Now, one thing to note, one of the true benefits of some of our DSCR options is that, for example, we have an option that only requires a valid passport, right? If you, let's say you're doing a purchase, if you're not from a visa waiver countries are, for example, most all European countries, Canada, to name, some examples are where you don't need a visa. So in that case, you would just need a valid passport, assets, if it's a purchase, and a rate and term refi. And the DSCR option, our best option, does not require a CPA letter nor credit reference letters, and are available up to 75% LTV on a purchase, 75% LTV on a rate and term, and 70% LTV on a cash out refi. And it is eligible for 1 to 4 unit properties, manufactured homes. Yes, they are. They actually have very good cap rates on those manufactured homes, and condos. Okay, now I didn't necessarily say non-warrantable condos. We can do non-warrantable condos too as foreign nationals, but they would probably have a little bit of an LTV adjustment. So beware. Right. So our foreign national full doc option, right, is an option that typically now is really important. The DTI is usually only going to be up to 43% DTI. Not going to be a 50% or a 55% DTI option, 43%. It is manually underwritten again. No DU, AUS applicable. This is like, portfolio type underwriting, right? Full doc can be two types. You're either going to be self-employed, in which case you're going to require a CPA letter from the country where the income originates, cannot be the US, or it's going to be a salaried or hourly employee where a verification letter completed and signed by their employer will be a requirement. Depending on which option you end up choosing, you may require a bank reference letter as a credit reference, or 2 credit reference letters from creditors in the country where they, the borrower, permanently resides. Right. So real important, because this is not homogeneous for everything. So we do have multiple options out there. We have multiple full doc options, and we have multiple DSCR options. So I'm telling you what the least complicated options are all the way through. And then on full doc, it could be as simple as 1 accountant letter, 1 credit reference letter, or 1 accountant letter and 2 credit reference letters. So it really depends. On the full doc option.
Do we have some examples?
Yes, I do. Yes,
Cool.
I do. I'll show them to you.
I'm
in the
sure
next
everybody's going to be
slides.
asking. I can see the questions
Yeah,
coming.
yeah, they're there. They're there, man. I got it all in there for them. And got some quotes too. The resume of business experience may be required of the borrower. If you're going self-employed borrower is really what we're talking about here. A salary borrower, they don't really care about their resume, but the self-employed borrower, yes, they do, along with the business narrative, which is the accountant letter. Now, the full doc option allows, and sorry, I didn't space something there, but it does allow for partial occupancy by the borrower combined with short-term rental use when they're not occupying the property. This is the perfect value play, win-win situation for foreign nationals. You got to remember this. Their currency has seriously deteriorated, decreased in value. The dollar's gotten strong. The pandemic made that amplified that 10 times. I mean, flight of capital has been coming to the US always, and now after the pandemic, since the US has shown its strength as a global currency, the dollar is one of the benchmark currencies for trading. They want their assets over here, but they need, because the dollar is so expensive for the foreign national, they don't need a trophy property. They need a real investment, but they also want their cake and they want to eat it too. So the win-win situation is the short-term rental property, be it a condo, a 1 unit, 2 unit, 3 unit, 4 unit, multi-unit, whatever. That is really the rage. That's what's selling. That's what's financing. And you're seeing now with all of our DSCR conduits out there, for example, they're all now starting to slowly but surely accept their DNA, short-term rental revenue proceeds. So, that is the wave of the future. It's already here, and it is not going to slow down, exponentially growing. On the full doc option, you do allow personal or entity ownership. Now, I always recommend entity ownership to my foreign nationals for multiple reasons: privacy, tax structure, inheritance purposes, passing the asset. I mean, there's so many reasons why you should be in an entity and not be in a personal name. Liability, it's going to be an investment property. Somebody breaks a leg in there. Now they're suing you. And then there's other reasons where they may want additional anonymity from other people, even knowing that they own the property. Real important, right? It's real easy just to do a name search for somebody and find it, right? So keep that in mind when you're dealing with it. And that's why it's always good to have teams set up so that you can handle this effectively. You need to have your team of your realtor that's going to be dealing with the foreign national. They got to be a CIPS. They can't just be any old realtor dealing with a foreign national, certified international property specialist. We've covered that a lot in the past on how to locate them in our building relationships training we had last week. You want to have the accountant that can help setting up all these entities for foreign nationals. You want to have the attorney that may also be needed for the closing and the structure. Typically the foreign national a borrower is going to need a little, it's concierge service. They're buying from afar. They may come here to close, they may not. So there's a lot of trust that has to be built, a lot of value that has to be added. So you need to have a solid team. You need to have a solid team, a solid professional team, because foreign nationals typically you're going to be dealing with the upper level of earners in their country. They're going to be sophisticated, and if you're not up to par with their level of sophistication, they're going to fire you really fast. But one thing's really important: learn to build your relationship with them, because they are high context individuals. That means they need a lot of personal TLC and prodding and all that kind of stuff. You got to make them feel good. You got to build friendship, build a relationship. You can't just jump into the business when you are trying to get their business. So now we got some sample documents here. This is the sample CPA letter, and in this case, it does have to be from an actual, whatever they call a CPA in their country, a licensed accountant. I doubt they're going to call them CPAs, but they got to have a business license, right? So the letter needs to be from the country where the income originates. So they live in Colombia, but their business is in Panama. They're probably going to need to do the accountant letter from that country. The letter needs to be on the CPA letterhead and accompanied by their business license, and it must be translated to English if in any other language. And this is a sample letter. They put this on their letterhead, pretty easy. Fill in the blanks: 2 year prior, 1 year prior income, year to date income, percentage of ownership. Everything is there. Obviously, you don't want them to copy this letter with blanks and everything. This is just a format they can use, right? So now we have a sample letter for income for a salary or hourly employee. Notice it's similar, but this one is from the employer. So it's a little bit different in what they're putting. It needs to be from the employer outside of the US, needs to be on the company letterhead, reflect their phone number and website and address, and it must be translated to English if in any other language. And now we have a sample credit reference letter for when the credit reference is like from a bank. The other credit reference letter, which I didn't include from here because it would be from one of the more outlier programs that we don't usually use, but it may be that you would need, that would actually be from an actual creditor in their country, where then you could just replace checking account with their account number, how long they've had the account open, the balance, and all that kind of stuff. But this one here is a bank reference letter, which serves as the credit reference letter for our main full doc option. And then now let's get you into some quotes. These are our reference letters. Now I'm going to get you into some quotes so we can tie in all the loose ends here, right? So this is a DSCR purchase quote, 30-year fixed, single family, $500,000 purchase, 75% LTV. And notice the main bullet point I have there: no credit score required unless they have credit in the USA. That's going to be applicable for all the foreign national options. If they have US based credit, guess what? Now they have to conform to the minimum requirements of that program for credit. If they don't have US based credit, you're good. You don't need any. So it's only if they have it, they want to see how they handled it. If they don't have it and it's outside the U.S. in our best DSR option, they really don't care. There's no, you don't have to document it at all. So this is also assuming a 3-year prepay. So in this example, look at your lowest cost option, 9%, with the lowest rate option of 8.25%. So pretty good options there. That's just under 3 points there on that cost. So this is again 30-year fixed option, right? So now, oh, excuse me, 30-year DSCR fixed rate option. So now we have our full doc, our foreign national full doc, 30-year fixed, same parameters, full credit and income documentation is required on this one. Obviously, full credit, according to what I just showed you, was the documentation, the accountant letter, and the bank reference letters that I did show you in the examples are the letters that will be applicable for this option. So this is our best full doc 30-year fixed fully amortizing option possible in the pretty much, I think, in 43 of the states or 45 of the states. I think this option is applicable. Pretty much anywhere where a foreign national is going to be buying, we can do this option. But now I saved this little treat for you all. This is a Florida only option. Now, this is the one that uh, just allowed me to get a deal this week. I competed against 3 other loan officers from other companies, and I'm sure it was this one, the one my borrower chose. But my borrower chose a 3-1 arm. This one here is a 7-1 arm, 7.25% interest rate, only 3/4 of a point in fee. So this here, I end with the best option for Florida for full doc on a 7-1 arm, lower rates than even U.S. national rates.
Right on. I got a. I don't really see any questions in here. I'm sure you guys have some questions. That was great. But I got one. You touched on it a little bit there, Jose. But a lot of people they don't know how to actually close one of these loans. So can you touch on? You said that they must have a visa because they must either be able to travel here, and sometimes they do, and sometimes they don't. So what happens when they do, and then what happens when they don't?
Oh man, yeah, that's a great question. Closing the deal can make it or break it. There's 3 ways that you can close one of these transactions. You can either A, come in person to the United States, which then you need your visa. You're going to sign at the title company, or maybe they'll send you a notary wherever, depending on where you are. Pandemic and all that kind of stuff could be in the middle of nowhere in the US, but you're here signing in person. Option number 2 is signing in your country where you reside. And in that case, there's 2 ways that you can do that. You can either go to a consulate or embassy and sign in person, whichever is allowed,
And by that you
because
mean U.S. consulate or
Abs-
U.S. embassy.
Yes, because it has to be a U.S. notary, and the only official U.S. notaries that they're going to recognize outside of the U.S. are going to be in an embassy or in a consulate, a U.S. embassy or a U.S. consulate. And the other way to be able to sign in your country where you reside, and this one takes a little bit of extra planning, coordinating with the investor who we're using and the title company who we're using, is remote online notarization. That is the third way, where the borrower will be sitting at home, right, online in front of a screen there. The notary is online somewhere else in the world and is watching the borrower sign. So the borrower is signing everything, the notary signs it, certifies the signatures and all that kind of stuff, and then the package gets sent in to the title company, and then it gets finished. It gets finalized on the processing, and all the notarization done properly that way. Because remember, the online notary certified everything that was being done, provides documentation, and then they accept it here in-house. So that is why that process is not accepted by every title company, nor is it accepted by every investor out there who we sell our loans to. So if we want to employ remote online notarization, we have to clear that up front. I had one borrower, two simultaneous transactions with her for a national borrower. Same investor we were selling the loans to, but these were purchase transactions, seller designated title, two separate title companies. One title company allowed remote online notarization, and the other title company did not allow it. And it was like a 10-day delay.
Yeah, one deal closed 2 weeks after the other because of that. So
Yeah, yep.
that's absolutely a great example. Apples to apples even can be different.
Yep.
We got a question here, Jose. Another great question in the chat. Power of attorney, is that possible on these?
Well, why would they be doing a power of attorney notarized at the embassy when they could just be signing the documents at the embassy? That's the whole purpose of doing anything other than that, is to not have to. For the bar, the real issue is delays at embassies and consulates. In some cases, it's months to get an appointment.
Just to get a notary stamp.
Yeah.
Months, yes. Right? That's what delayed Jose 2 weeks, right? It wasn't his choice. There was only 1 day per month that they accept notary stamps, appointments.
So then you have to be juggling your rate locks too.
Jose, but I like this question because can they do a POA with their attorney in the U.S., which does happen. Many times they have the attorneys set up their LLCs, but can they give their attorney POA?
No, from the experience we've had in the past, a POA closing for a borrower signing outside of the U.S. is only possible if the borrower is a U.S. national, because of the ID verification that they need to do. They can't verify the foreign national ID the way they can verify the U.S. ID. So we have run into that situation, and to date, at least, the ones I've seen, has not been possible.
And then just one other trick that we almost had to do, Jose, that we did a lot of research on. There are notaries that will drive to the Canada border or the Mexico border on the border towns if your borrower is just over the border. So we had a borrower in Toronto area, and he was considering, instead of waiting for an embassy appointment, taking a 4-hour drive or whatever it is to the border. And the notary charges, I think it was like $250 instead of $50 or $100. She's going to charge $250. She'll meet you at the border and notarize the documents because she's U.S. or the lady I talked to, at least. Sorry.
Yes, correct. As long as you can, there will be confirmation of the signing location, and as long as it's in the U.S. borders, then you're okay. And there will be some affirmation to that in the documentation side.
I don't. Someone in the chat was asking how common are foreign national loans. I wish you did have that in the presentation, but 59 billion last year of purchases. So the percentage of those that were financed, I think we do have a slide on that, but it
Yeah,
wasn't.
it's about 59% now are going financing. They used to be a lot higher in the percentage of cash deals, but like I mentioned, the cost of US dollars has increased exponentially for the foreign nationals. So they are embracing now more the concept of financing, which really is not inherent to, let's say, South American or Central American or Mexican, where they, for example, they don't want to borrow. That's not in their habit, or because the cost of borrowing is so expensive. Their habits of borrowing are they've been conditioned that it's something you only do in emergencies. So, but now with the cost of currency, they've embraced foreign national borrowing.
So in other words, about 6 in 10 of the 59 billion last year was a financed transaction. So that's your answer there, Blake. You'd have to do some other math to really kind of get down to it.
And it's concentrated in those 6 states that I mentioned. The rest of it gets peanuts, but it's concentrated in those 6 states. So those are 6 licenses that you would definitely want to have if you're planning on doing, wanting to add foreign national loans, which I would highly recommend to your arsenal.
All right. I think that's it for the questions. Definitely good stuff. And make sure you guys hit those leads. It's often, sometimes I would say hit the phones to get those foreign national customers, but sometimes it's hard to reach them on the phone. Definitely use the email, use the text. It's definitely going to be a little bit of a challenge to communicate with them, but hit them up. They're definitely a great outlet. And remember, like Jose said, they don't know they can finance. So these are great customers. We can turn that 6 out of 10 into 8 out of 10, and we just created something out of nothing, right? Something that helps the borrowers, hopefully in most cases. They just chose not to borrow for some other reason. But hopefully it's a win-win for everybody if we can turn those. And then, of course, there's also business to capture, as Jose mentioned.
All right, beautiful. Okay, thank you everybody for tuning in. What we'll do is we'll go ahead and wrap it up. Now, we do this every Tuesday. We do our mentor meeting here at 7 p.m. Eastern time, so definitely tune in next week. And we have our daily mortgage rates live, where we do the actual rates live every morning at 11 a.m. Eastern time. And we go through how the rates change every morning and then do a deep dive into a topic, which one of those topics was foreign national. So we did something similar to this, and we have a new topic every day. So thank you everybody for tuning in. Appreciate it. And we hope to see you all tomorrow at 11 a.m. Eastern time.
Thanks, everybody.
Have a good night.
Thank you, everybody.